This is the May 12 edition of Commodity Week.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include Bill Biedermann of agmarket.net. He's in Spring City, Tennessee. Aaron Curtis is here from Midco Commodities out of Bloomington, Illinois. And Logan Kimmel joins us from Roach Ag Marketing in Naperville, Illinois. Commodity Week is a production of Illinois Public Media. It's public radio for the farming world. Find us online. Listen to us on demand at willag.org. There you'll find our Commodity Week program and our daily closing market report. Let's begin by getting a list of items that we should discuss for the day. Logan Kimmel, what's on your mind?
Well, news today. We had the USDA report come out and showed a little bit tighter wheat inventories and a cut to the U.S. new crop corn yield that kind of surprised the trade a little bit and had some fireworks in the wheat market with all three classes up 60 to 70 cents, and brought the corn and the beans with it here as the report number came out and the market's trended higher. So with that being said, now the trade, I believe, is going to shift over to the weather, which turn a little hot and dry now.
And Aaron Curtis, so we'll take up the reports and the weather. What else should we discuss?
Well, planting progress is kind of top of mind right now with some of the active work that's been going on across the Corn Belt. And, of course, what's that going to lead to more acres talk here as we get past this report now and more into June, especially towards the end of the month when we'll see June numbers. Of course, they'll be set around the 1st of June, so that's right around the corner. So are we seeing much movement in terms of corn and soybean acres here now that we're out in the field actively? And then, paying attention a little bit to these outside markets. Obviously, crude's been pretty volatile, dollar quite a bit higher again today. Equities have been in a little bit of a free fall here the last week or so. And, if anything, what does that mean for commodities here as we move forward?
And Bill, I suspect they may have left at least one or two items for you. What's on your list that we need to take up?
Well, Todd, I think USDA did a pretty tremendous job of agreeing that trendline yield at 181, which would be a second record in a row and a huge jump by almost 4 bushels, isn't realistic, and they kept it at last year's record. That is a surprise, though, Todd, because they have always used trendline yield since 2014 and in their May report, so we usually don't see big adjustments till June or July. But they left the acreage, which they typically do. That's their MO, and that acreage number is most likely going to have to be adjusted with what we're seeing. So how will that affect carryover? They also have cut demand dramatically. We're looking at a 400 million bushel decrease, 15 million metric tons worldwide of corn demand is going to evaporate. So the question is, well, where will that demand go? What's the substitutable starched commodity that they can go to? Because if you look at wheat, it's not the wheat market. And that's the next thing is the wheat supply demand, leaving the yield at 46.6. Certainly not a likely yield when Oklahoma is reporting their crop estimate at 50% of last year's production. So we've got some real issues with the corn and the wheat numbers. Agreeing with USDA at this point in time of year, but expecting some pretty significant revisions. And same with the wheat world numbers, a 12 million ton decline in demand. But what's going to substitute? How are they going to do that? Are we just going to quit using it, or are they going to use a substitute commodity? So those are the big picture things that I'm watching to see revisions down the road.
I'd like to come back to wheat in just a bit, but I think maybe we should start with planting conditions and talk a little bit about acreage shifts, if those might happen. Aaron Curtis in Central Illinois from your draw area. How far along are farmers, and are they very worried that they'll be able to get most of this crop in by the 20th day of May?
I think the start to the week, or at least if you went back to last week, right, we're thinking that this was going to be a giddy up and go time this week, and it was a little slower start than what most anticipated. Not a lot of work got done on Monday in general. Tuesday was a little bit better start, but still not a lot of activity. But really taking Wednesday and then Thursday, and obviously Friday should be a busy day as well. So I think once we get to Friday night, assuming we get a little rain shower on Saturday, we're going to be well on our way to 60-70% of the corn planted through central Illinois, and we had a little bit better start on beans anyway going into this week. So I'm going to put us probably somewhere between 60 and 70% done on corn and soybeans, assuming everything cooperates here for the next 2 days. But I think Southern Illinois is a little different story. They haven't had a very active start here. If you get south of, say, Interstate 70, they're still a little too wet, so those areas are going to continue to be a little bit behind Northern Illinois. I drove up to Northern Illinois here yesterday on Wednesday, and it was pretty active. So I think the top 2/3 of the state are going to be well ahead of the bottom third of the state here as we move through the weekend. But I'm putting it 60 to 70% done by Friday night, assuming everything continues to go well, because obviously this week, the last few days, are a reminder that not only are we planting corn and beans at the same time, but we can cover a lot of ground when conditions are right. So that's kind of where I'm estimating it right now, Todd.
Given that producers are planting both crops at the same time, and maybe soybeans more often than corn early, I think, do you think in just the state of Illinois, or maybe Illinois to the east, that there will be many acres that are shifted based on the USDA report and the potential price hikes that could continue to come with corn?
I think a little bit, but I don't think it's going to be a big number by any means, Todd. I think most of these folks right from here east are pretty set in their rotation, so I don't see any large shifts at this point. May gain a few more corn acres. I think 2 or 3 weeks ago, if we would have had pretty ideal conditions, I could build the case that corn acres are probably stole a few more bean acres here than what we saw in that March 31st crop report. I think corn acres will be up slightly, but I think in this part of the world, we're not going to see any major moves at this point.
Bill Biedermann, I'd like you to pick up on that, take out the western part of the Corn Belt and maybe some of the fringe areas. Will there be changes?
Well, Todd, yes, there will be. There's just in South and North Dakota and Minnesota, there's 17.6 million acres of corn. There's another 3.5 down in Missouri. So there's 21 million acres in states that are having significant issues. In the state of North Dakota, 30 miles east of the Red River Valley and all the way to Bismarck, most people haven't even touched their fields yet. We've got some operations that are significant up there that we work with, and right now they've switched as much corn seed as they can to 80-day, and their plan B, which is going to be a decision made soon, is going to be to just switch every acre they can to beans, because planting it is still better than PPing it. But we've identified on a very conservative percentage of acres that are wet, about 2.17 million acres that are really bad, and will be questioned whether they even get planted or whether they get switched to beans. We'll have to see. Planting date up there is 5/25, May 25th, which is fast approaching. That's probably not going to make much progress by then, but they can keep planting until June 5th before the absolute cutoff.
In Logan Kimmel, Roach Ag Marketing has offices throughout the Corn Belt. Have you been able to glean from them very much about what decisions producers have made as it's related to acreage?
Yeah, I think Aaron and Bill are spot on, and I would agree with into central northern Minnesota and North Dakota, that will become a big question with that 5/25 date coming up. What acres do shift over with how wet it is up there, and I also think kind of an outside market, but a commodity that's not getting planted there as well as spring wheat on new crop. Do those acres with the clock ticking shift over to the beans, being that they can't get that crop in? I would agree totally with what Bill and Aaron have said so far on the acres.
Can you follow up a little bit with wheat? You talked about tighter wheat supplies in the USDA report. How tight can they get? And does spring wheat really matter very much in this context, or does it move on its own?
Well, it's the spring wheat's in a smaller area, grown in a smaller area, that's tacked on quite a bit from a futures market standpoint here with the weather delaying the planting and even in the last two trading sessions. from the numbers today, I guess my takeaway from the 2022-23 world carryout numbers was kind of a shock to maybe the average trade estimate was the Ukraine wheat production being cut 11.5 million tons, so about a 35% cut year over year. And I think that's what maybe propped up all three classes of wheat, is seeing that global carryout number be cut from what the trade was estimating. And it does make sense with what's been going on the last couple months overseas. But I think in regards to the wheat market, that was probably the big shock on supplies.
Aaron Curtis, why did this shock the marketplace? Because USDA really hasn't taken much out of the Ukraine numbers, I don't believe, until this point. But most thought that surely there would not be a lot of wheat or corn come out of that nation, given the issues that are impacting them with the war related to Russia.
Yeah, so taking production in Ukraine down to 21.5 million metric tons next year versus 33 this year, and then exports on Ukraine next year at 10 million metric tons of wheat. So I think what's interesting, I guess to me, right, is the wheat export program out of the U.S. has been nothing short of just not good, right? Or you could use any adjective you want there. Just it's pretty poor. So, the question is does this finally change here at some point, right? Do we finally start to see a little bit of this business coming back to the U.S.? USDA did raise old crop exports a little bit here today after taking them down last month. So we'll continue to monitor this a little bit as time goes on, but a little bit surprising to me that wheat was up that 70 cents today. Although, you start looking at some of the numbers, at least state by state numbers. You just take Kansas, Texas, and Oklahoma today, right? 180 million bushels less wheat production this year than a year ago. So that dry weather out in the southern plains obviously taking its toll. We've got dry, warm weather across Europe, warm weather in India, some of the more major wheat producing countries in the world and continents. So there's just a lot of moving parts to happen still on wheat, but it's going to be interesting to watch the export side on wheat here as we move forward, at least from the U.S. standpoint. Does it get tight enough in some of these other spots of the world where the global buyers kind of got to hold their nose and come to the U.S. here and start buying some wheat? So the proof will be in the pudding here as we move on, whether or not some of this rally that we saw in the wheat market today is sustainable or not.
Bill Biedermann, given the wheat supply and demand tables you mentioned up front, do you think it is sustainable?
Well, Todd, until we have a new production cycle or get the risk established on this production cycle, yeah, I think there's more buoyancy to the market if something happens, despite right now we're seeing a deceleration in the inflation and a sell-off in the stock market. If that were to really rumble and tumble into the commodity world, then yeah, I would say we've gone high enough. But Todd, right now with the risks on the table that Aaron just mentioned about Europe and India, and the U.S., our own place, even with the still high numbers of production that the USDA is using, worldwide, 774 million metric tons, they're showing that we have to cut demand by 12 million tons. What's going to make a person cut? Because usually when things are getting tight, like if you think a hurricane is coming, the first thing you do is you run to the store and you buy water and you buy food, right? So, we're seeing a hurricane come towards the food industry in starch grains. So you could see higher demand, not lower demand, number one. Number two, you will buy something different. Like if you can't afford wheat, then you'll buy barley, or you'll buy corn, or you'll buy some other starched grain. But you can't buy corn. That isn't there. So it's a dilemma, and I don't think we've seen capitulation yet.
Aaron Curtis, I want to talk to you a little bit again about the crop in the United States. This 177 that USDA now has, down from the 181 trend-adjusted, weather-adjusted yield from the Ag Outlook Forum. Do you think that's a good number to start with, given how far along producers have been in their planting?
I think it's a fair number at this point, just based on some of the maybe later planted than what than what we would have liked. I think, we've kind of proven over the years, at least in the recent history, right, the earlier the better in terms of planning. And I think just the fact that we're, behind average is probably fair at 177. That would equal the record of last year. So, it's just a math problem, right, at this point, trying to figure out what this early yield is in May, and then obviously a lot of room to adjust here as we continue to move forward. But from my vantage point, seeing a little bit of delay in what we've seen in planning, and especially in some of the areas that out to the west and northwest, I would say it's a fair number to start.
Bill, are you satisfied with that number too? It sounds like you really were.
Yeah, I mean, honestly, we were just pretty shocked because statistically USDA just comes out with trendline yield and they come out with surveyed acres, and that's the numbers they use. So for them to make that exception and deviate from their normal pattern was pretty incredible. But I got to admit, I think that we have had a new USDA since they made some changes there, and they're really making an effort to be more in line with numbers that the industry can use to do risk management with. So I was satisfied with this. They're actually right in line with our working number. So now it's just a matter of adjusting acres, but we're not going to see those acres adjusted till June 30th. So we're going to live with these for a while.
And the changes they made in the S&D tables for usage, are those okay with you too?
No, not at all. So, it's going to be very difficult for us to lose 400 million bushels. Demand right now for feed is going to remain a little bit stronger unless we really turn these margins negative. But to drop feed usage by 275 million, that's kind of a big ask at this point. The ethanol number, I was impressed that they left it where it was at 53.75 unchanged for this year. Certainly good profitability in ethanol. We're going to push towards a 15% blend this summer, and that's going to be good for usage. The export number coming down to 2,400. You can't really argue that because of the pace that we've been at lately. But when you look at the world, the big picture world of just starched grains, period, just all starch grains, and you take the percent of that market share towards corn and what's available for wheat, it's going to be difficult in my mind to see that lower export number come to fruition. Not based on price, Todd, just based on needs of what it takes to feed people.
Logan Kimmel, given all of that, you wanted to talk about weather. I would like you to concentrate on the wheat crop in Europe at this point and the potential problems that might be developing in France, the largest wheat producer in that part of the world, and Germany, as it relates to dry conditions there and what impact it is and may have.
Yeah, I think it's kind of potentially the perfect storm brewing with the issues there, and Aaron mentioned earlier in dryness in India, as well as here in the wheat plains. All three coming together, is that enough? Is the price today enough to ration demand? But we don't know what the production levels are going to be. So could the global wheat stocks continue to get a little tighter due to shortfalls in crop production? It's possible. And what does that do for our futures here? Well, I think it could still remain very volatile, both to the up and downside, with the uncertainty on a global level on the wheat production side.
Did today's report, and I think I'll start with you, Aaron, but check with everybody on this one, did today's report put wheat into the driver's seat, the lead in the CME group today rather than corn? It's been there before. Soybeans have led part of the last year as well. Is wheat back in that lead position again?
I think it is in the short term here, because I think if wheat wasn't higher, corn would have been lower today, especially the old crop, right? Not changing anything on the old crop balance sheet. I think it would have been a weak link today, probably beans as well, because there wasn't enough change there to keep beans higher. So I would say based on today's action, it kind of proves that wheat's going to be kind of the driver here in the short term, watching weather in the southern plains and across the continent, across the pond too as well, just to see how things shaping up in terms of weather over the next few days. So I think today's action kind of kind of would say that wheat is going to be the one to watch here for at least the next few days.
Bill Biedermann, wheat's the one to watch or not?
Well, I think it is, because I don't think we've, seen. Honestly, I don't see, even here in the United States, how wheat that's headed out at shin high is going to, produce a 46.6 bushel yield. So I think there's some pretty dramatic number revisions here in the U.S. And when you start to plug that into the world numbers, and they're still carrying some fairly large numbers for Russia. They have revised down the Ukraine number a lot, but they certainly have not revised down the India numbers very much. So, when you start going down this whole list of things, there's a lot of work to be done. And it's going to take a lot of absorbing of these things that have to happen. It's going to be really difficult when you take these numbers that we see in reality and not reflected in the numbers that USDA put out yet, because it takes time, and then you combine that with some of the logistical and shipping issues and challenges that we have. There's going to be some regional pops in these markets that just kind of blow our minds.
Logan Kimmel, wheat in the lead?
I think so, and I think something to remember too, we saw at the end of February, beginning of March, the wheat classes attract the money flow very fast, and it can leave very fast. But when you talk about hedge funds and specs coming in and pushing a market on news, it always seems that the wheat can attract that and get exuberant to the up and downside first. And I think we saw that today. I agree. With the corn spreads from old to new, I'm not even sure if July corn would have closed positive today, but being almost limit up, closing almost limit up on the wheat, allowed that to happen on the corn. So I think for the short term, yes, it will be the leader.
How do producers with corn and soybeans, corn particularly in this case, think about that as it's related to their pricing, if anything, that they need to do at this point as they put acreage into the ground and they feel more comfortable about moving forward on some cash or other sorts of sales? Aaron Curtis.
I think it's more timing at this point, Todd. I think if you've got old crop left, right, it's one of two reasons typically, right? You kind of don't need the money, or you just extremely bullish, or maybe more of an insurance policy against not being able to get the crop planted. So that's kind of your old crop insurance against your new crop. So you're kind of picking numbers on the old crop at this point. I think there is some opportunity for a little bit of a basis improvement, like Bill was talking about, on old crop corn. But I think new crop is going to probably take over some of the leadership like we saw here today. So I think it's more of a timing at this point, right? Once you get the crop in the ground, get up, feel good about it, I think you got to inch into some more risk management here, because I think the last week obviously proven us that this market doesn't need to go up every day, right? We saw corn drop 50 cents in a matter of a week, right? So things can go against us here in a relatively short amount of time. So I think in this $7.50 to $8 range on December corn, if you haven't got much risk management in place, I think you got to put some incremental plans in to continue to reward those type of markets, because these are really, really good prices.
Yeah, I would agree with that. We saw the market show some weakness, but it was well supported. The 7 to 7.20 December corn level. Now we're back up to where we kind of peaked out there in April. So any bit higher than here, I think producers, once they are comfortable with what they get in the ground, get to a level where they can take risk off and lock in some of these profitable levels and good levels, because we've seen how fast they can kind of fall out of bed here with a lot of moving parts, not just in the grains, the corn and the beans, the outside markets, the financials. A lot can happen in a short bit here, along with the weather. So getting to levels that make sense from the P&L standpoint, locking in those margins slowly, I think is the right thing to do.
Todd, the Dow Jones is down 25%, losses in pension and equity accounts, and you got speculative traders or, investors calling their brokers saying, well, what am I in a risk position on? And they say, well, we've diverted into some inflation risk commodity positions with ETFs. And they say, well, just get me out of anything risky. I don't want to lose anymore. That could put pressure on us. The bean acreage increase that's anticipated could put some pressure on the beans. That could pull corn. And hey, we've got a lot of moisture in the soil instead of the drought we've all been talking about for the last 4 months. So could the market go down? Yes. Do I think it's going to go down? No. I'm going to gamble that it goes higher, but I can't gamble $400 to $500 an acre net profit that I can lock in right now after all cost and after all the costs of my option cost. So I'm going to lock in $400 to $500 an acre and know I'll make money if it goes down and not worry about it. But if it goes up, I'm in the game 100%, and I'm going to make a lot of money if we go to where I think we're going. I mean, $400 to $500 is a lot of money per acre net after over all my costs. I've only done that like maybe once in my life. So, I think this is a no-brainer, Todd, for me. But I like to gamble, but I like to walk away with profit in my pocket. So I'm saying buy puts and then gamble that the market goes up. If you don't buy the puts and it starts going down and all these other things start to get heavy on you emotionally, you might end up making a bad sell, like some people did when they were talking $2.50 corn when it was $3.20, and all we did is go up after those sales were made. You don't want to make that mistake again.
Logan Kimmel, soybeans and marketing plans. What should we do?
Yeah, I'd just be interested to watch the old versus new crop bean spread. I mean, I think if November beans, depending on where acres go to, but can get back up to kind of the upper end of the range, we've been recommending from a marketing plan standpoint from a cash sale, locking in some sales as you get the crop in the ground, the same for the corn, and coming in with some form of upside. I still think that's the unknowns. If you're going to make a sale, one way to do it is, like Bill said, with some puts, or if you would like to get a physical cash grain on new crops sold, I think you still have to have upside on the board, whether that's in futures or call spreads. We just came out of a buy signal, and that's what we were recommending to do because of the unknowns. You could tack on more dollars on top of these new crops, but you still have to manage your risk along the way, and that's one way to do it.
And finally, I'll check in with you one more time, Aaron Curtis, this time on soybeans.
Yeah, from a risk management standpoint, I think it's still timing too as the crop gets in the ground. Adjust your risk management plan accordingly. But anytime November beans I think are above $15, I think I'd be incrementally selling them and try to get to that 20 to 30% sold here as the crop starts to come out of the ground here, and kind of play it from that way. And I think we've already bought quite a few beans percentage wise versus corn. On average, we're assuming 20-25% bought on new crop beans across the corn belt. So if you're not in that area here as the crop gets out of the ground, I'd be expanding that up into that range, especially if November beans poke their head back above $15.
Let's get a final word from each of you now. I think, Logan, I'll start with you today. Anything that you want to pass on?
Crazy report day, as always. And I think in the short term, this wheat market's something to keep an eye on. Does that attract more spec money? Do funds come in and pile more money into the commodities with the inflationary aspect still playing a role? And so I think there'll be marketing opportunities around the corner very shortly here, and it's the time of the year to be locking in some new crop sales and still maintaining some upside. And that's what the report here showed us today so far.
Bill Biedermann from agmarket.net, your final word?
Well, this is a year like no other in my entire 42-year career of trading. So, you could mention any price objective, and I would have no reason to not believe that you're right. However, I think when you're a farmer, you're a businessman, you have a huge operation, gigantic cash flow requirements, and just remember this, you're farming for profit, not for price. So I don't really care what your price objectives are. If you've got the kind of profits that can be locked in and manage the upside risk accordingly, maybe that ought to be a wise road to take a look down.
And Aaron Curtis from Midco.
Yeah, I agree with Bill's earlier comment just about managing margin here at this point. Some good margins, profit side here. We want to continue to manage that as well. And I know we get kind kind of hear the same old thing here on terms of volatility, but it's alive and well, just like 80-cent range in wheat here today and another 20-cent range in corn. That's going to continue to be the norm here as we move through the summer. We haven't even got into U.S. weather a whole lot, and with the tight balance sheets that we're dealing with, both U.S. and worldwide, it's going to be an interesting summer. So I think we just want to remind folks, right, to kind of set those targets and put these offers in, because there's opportunities and even in the overnight trade, day trade as well during the day session, right? There's some of these things, especially if you're busy, they go up and hit these offers. So make sure you're kind of setting these targets and getting those offers in with your local elevator so you can take advantage of some of these volatile moves we're expecting to see in some of these wide ranges that we see on almost a daily basis now.
Commodity Week, of course, is a production of Illinois Public Media. You may find and listen to the whole of our program anytime you'd like. You can do that at willag.org, willag.org. Our thanks go to our panelists this week, including Aaron Curtis from Midco out of Bloomington, Illinois, Logan Kimmel of Roach Ag Marketing in Naperville, Illinois, and Bill Biedermann of agmarket.net out of Spring City, Tennessee. I'm Illinois Extension's Todd Gleason.